Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to make sure that we know what the news is and when it's going on, so double checking the news and some of the events for today. That way we're not taken by surprise. And looking at the news announcements earlier today, at 8:30 we have the initial jobless claims forecasted 795,000. Previous was 787,000. There are also some medium news announcements with import-export pricing, but that's not really much. 7 o'clock does have the OPEC monthly report as well, but most of the OPEC news is kind of done this week. FOMC member Bostic speaking at 11 o'clock. We have the Thomson Reuters IPSOS PCSI for January coming out at 11 o'clock. And then the only other big announcement is at 12:30. That's Fed Chair Powell speaking. And with, just a few things going on around the White House and in D.C. in general, it's a little bit more interesting this time around. So news is relatively light, but the news that is coming out might have some pretty big implications. So with that out of the way, now we can jump into today's date being 1/14 of 2021. So first up along the way, we've got the NASDAQ, and the NASDAQ held beautifully off of that support and rallied up to a near new high. It didn't make a new high, but it did form a new wedge top. The gap that they left behind at the top is still open. We haven't filled that in, and realistically, looking for what the buyers are going to want to try to gun for, it makes a lot of sense for buyers to really be targeting that gap fill. The one caveat is when you have a gap that is open at the top like that, and then it gaps down into the next day and continues down, that can potentially cause some problems. That's a lot of weakness, and it's weakness at the top. That's a bad sign. Now, it doesn't mean that the buyers can't keep going higher. In fact, the probability would dictate that they will, at least with a higher probability than the sellers taking over. But realistically, it's starting to transition into a bit more of a range. Buyers are having a difficult time getting it going up. Sellers are having a difficult time getting it going down, although buyers are picking up pretty aggressively on the dips. We're not seeing them rip through the highs yet. We just recently broke some of these major swings, and now they're failing back through again. So this isn't what buyers want to see. Maybe lower towards the channel lows, maybe another retest, or even better, a trap underneath that middle low. Either way, it doesn't look like they're ready to strike yet because it's still just kind of hanging out. Over on the S&P, obviously a similar situation here as well. We've got just kind of price stuck. It's not doing anything. We're stuck at the top of the possible channel. That channel, just so you know, is derived off of point A, point B, and then transposed up here. It lined up really well with that, and now they're trying to break above the highs, breaking back down, holding as resistance. It's obviously there. It's just a matter of seeing whether or not they're going to respond to it. And the fact that the buyers have failed so many times up here, this is a nice rotation higher, and they haven't made it to a new high. We still have that unfilled gap up here. There's a lot of objectives that would be begging for one more push up. That said, it seems like the buyers are running into a heck of a lot of trouble here. If it does catch another rally up, it's likely going to be a weak test of the highs, which sellers will then try to push right back down again. Gold going sideways for the most part, relatively choppy, sloppy, but it does appear as though the sellers have a bit more oomph. Every time the market tries to go lower, it is making lower lows. It's also making higher highs, but after those higher highs, it then came back down and makes lower lows and lower highs. So the sellers are still in control. At the best, the buyers can hope for, if they're going to try to bounce it here, is a range. The V bottom time is gone. That was over here, maybe over here, maybe even over here or here. And all of those attempts failed. So when that fails, typically it takes a lot longer for the trend to start reversing. You've got the initial drive down, you've got some good follow through, and then you can see the congestion. And with this congestion, usually comes a bit more down, but it starts going a lot more like this. It's not as clean. It's a lot choppier, a lot sloppier, and it's just kind of a bit more range bound. So we're transitioning into that phase. The sellers still have the control, obviously. They're pushing down pretty aggressively off the top. So as long as the sellers are maintaining control and the market can break back down, and this is important, break back down below this low. Right now, they broke underneath it and failed. If they continue to fail, that's a horrible sign for the sellers. The sellers need to absolutely get underneath this low and keep cranking down. Otherwise, we could be in for a reversal right back up again. Crude oil showing some fantastic support off of the repetitious L1. Lots of bull support coming in and around this 52 area. Keep in mind, we were talking about this on the weekly brief, how 52, 53, this area is a major zone of resistance. A lot of buyers will be taking profit, a lot of sellers potentially looking to press back down again. So being that we're right around there, it went a little further than I thought. I wasn't expecting it to get close to 54, but either way, it's still made it up here. And given these major objectives are being complete, it's more likely that we'll start seeing the market go into a bit more of a range. And I know that seems to be kind of the common trend today, but that's because we're on a deep pullback zone. On all of them, whether it's a pullback or a retracement, the market's pulling back a little bit. And if they can continue back up, chances are when we hit the highs, it's going to be weak, just like all of the other markets. And if it's weak, it'll probably roll down and we'll end up transitioning into a range. So right now, crude oil still has a bullish bias, but once it gets to the highs, that's where they really need to either prove it and slam through the top and then it's off to $60, or fail and then we'll probably float back to test 50. The euro showing some pretty good continuation of the downside, but here again, super range bound. It's having a lot of trouble down here. The market's having a difficult time continuing lower. They had their attempt. The resistance held really, really well. I believe, did they fill the gap? Ooh, no, that gap is still open. They came real close, but that gap is still open. And with that job out of the way and a failure to fill and now rotating down, this might be the last shot that buyers have to try to finish this and roll it back up. And if they're able to, we could be in store for a large reversal. That said, if the market does go back up, fills it, and then immediately fails back down again, that's one of those situations that job's done. Knock your hands off, right? It's time to go back home, and all of those buyers jump ship and the market rolls right back over again towards the lows. So the fact that we're coming into this major zone of support, we've got some nice divergences on the lows. Buyers are showing they want to try. My concern is that if they try too little and it gets back to the highs, it's just going to drop again. And then finally on the crypto sphere, we've got Bitcoin with a fantastic rally to the upside again, or at least more of a continuation back up. We're trying to challenge into the 40,000s, and this is the big zone that a lot of traders were expecting to see. We've got that nice blow off top in early January. It pulls back. It goes into potentially February, which is still early, about halfway through the month though. And it goes into February, usually dips a little further, and then pops up towards those highs with a lower high. Well, if we look at what happened so far, the highs are at 42,000. We're already at 38, right? That's pretty characteristic of a lower high. Along with that, we're seeing some divergences off the top. There's a lot of things saying that it might be a bit overextended here. There's some buy zones on the shallower side at 37,500, but realistically, if it wants to pull back, timing, channel lows, everything lines up a lot nicer, more around the 36s. So that would be a slightly more beneficial zone of interest. Still in a range. I mean, we've got higher lows and lower highs. We're not breaking out. We're just forming a wedge. And until we get a clear, decisive move out of here, it's basically trade it like a short-term kind of bullish range. Buy low, maybe less so on the sell high. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, I hope you have a fantastic day of trading today, and we will see you all tomorrow. Thanks.